You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the world of volatility? Well, let's find out together, shall we? It is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com. Hope you're having a great trading week. Remember, if you want to get access to options oddities, it actually came at you a little early this week. You got it last night instead of after the show today. So if you want to check that out for yourselves, it's already available on the Pro podcast feed, as well as our awesome Pro Q&A from earlier this week and a whole bunch of other fun stuff. Theoptionsinsider.com/pro is the place to go to learn more, get access to all that cool stuff. Also, January Pro Trading Crate going out the door soon. Get your name in the hat before the end of the month to be eligible to win that awesome prize. Trust me, you want to get one of those in your trading life. They are pretty cool. Each one bespoke. I see them going out the door. I'm like, man, we're giving that away, huh? That's pretty cool. Theoptionsinsider.com/pro to get your name in the hat. As we go around the horn, see who's joining us on the old Volatility Views program today. First, let's go out. Maybe he's in the hinterlands of Chicago. Maybe he's in the hinterlands of Indiana. I don't know. Let's find out. He is the once future and present Dr. VIX, a.k.a. Mr. Russell Rhoads, holding court down there at the Kelley School of Business at the University of Indiana. Mr. Rhoads, welcome back to the program, sir.
I'm pumped up and ready to go. I had breakfast with a good friend of the show, Rick Excel, this morning. Wanted me to tell everybody. He said, hello.
Terrible
and
human being.
He'll see you soon.
I don't like the two derivatives professors on the network getting together. It's like a little cabal. You're plotting behind the scenes.
We live out here together. We're in the same neighborhood. So just the way it is, man. And of course, your ears are burning because all we did was talk bad about you.
I would think you two would be bitter rivals, blood enemies to steal students from each other. That's the way I painted in my mind, at least, to have more fun.
You just want me to fight with people. You did the same thing with Carly.
I did do that, and it worked out well. Great listening was had by all on the pro side. Check out that pro Q&A debate they had, listeners, if you missed it. Another reason to sign up for the pro. That was a good time. And then also joining us, speaking of good times, it's been a while since we've checked in with this person, at least on Vol Views. He did join us on the pro Q&A back in November of last year. But before that, this doesn't sound right. Have we not talked to you, Scott, since pretty much a year ago, January 26th of last year? That doesn't seem right. We are joined once again for the first time in the new year, and pretty much the first time since last year, by our good buddy, Mr. Scott Nation. Scott, welcome back to the show. Is that right? Has it been a year?
Well, that seems like a long time, but yeah, that's about right. I love doing pro Q&A, and I get to do that frequently. But I also love doing vol views, and it's been a while.
All right, then. Let's get down to business, listeners. It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. We got a lot to review in this wild week and to kick off this wild new year. But before we get there, Scott, as I just mentioned, it's been a year since we talked to you. So a lot's gone on, as you may have noticed, in the world of vol since we last chatted. We had a bit of a meltdown in August, a kerfuffle, if you will, in the market, a little thing called the election, a whole bunch of other AI madness, some Fed dust sprinkled in there over the course of the past year. So we're doing this with everybody at the beginning of the year here, Scott, and it's still January, so I'm still legally allowed to do it. So, Scott, as you look back on the mad, the wild, the tempestuous world of vol that was 2024, what really stands out and resonates to you, sir?
Well, you mentioned August. I think the thing that stands out now is how quickly traders rush in to sell any big pop in volatility. I mean, we certainly saw that in August. Every time there's a pop in vol, people feel like it's a selling opportunity. They race in. We got a pop in July. We got August. We got one middle of December. And while volatility reverts to the mean, people are helping it do that really quickly. And that's to the degree that people make money doing that, good for them. My fear is one of these days, people are going to rush in to sell a big pop in volatility, and it's only going to be the first shoe dropping.
That's something we've been kind of commenting on and lamenting here on the show for the last couple of years, really. But you're right, it really did seem to come into stark relief very much last year. Was all of the vol pops we had were very short-lived. I mean, look at August 5th. It seemed like the world was melting down, and the markets pretty much rallied from the open. Vol came in pretty much from the open. So once again, you had a few short minutes to really sell the apex of vol. This is something we've been talking about for a while. And you're right, Scott, it does kind of breed in to the vol trader this mentality of, oh, hit the bid, vol's popping, hit the bid, vol's popping. And then hopefully we don't get it anytime soon, but we get that one day, Scott, where VIX goes to 60 or 80, and it's really melting down, and you let go of everything at 22 because you were conditioned to do so.
Right. I mean, think back to 2017 when volatility was very, very, very low, and for good reasons. But, as soon as it popped, I'm certain there were some people who sold it, and then February 5th of 2018 came along, and a lot of people just got handed their heads.
Let's get into what we're seeing out there right now, listeners. It's another one of those days where if you don't like what you're seeing in the market, just maybe wait 5 minutes, especially if you're a bull and you like to see all of the major indices green, because you started off the day this morning, a little bit of red was still lighting up the tape. Dow was struggling to make it into the green. S&P was up, but up slightly. NASDAQ up, but up slightly. Now, as the day has progressed, the session has progressed, the bulls coming out more in full force. S&P up about 0.2%. NASDAQ up 1.25%. Dow up about 0.1%. S&P back north of 6,100. So once again, flirting with record territory out there. All that on the vol side means a VIX cash hanging out at about a 15, which actually puts it up about 0.25 point from where it was this time a week ago. We were right around 14.75 this time a week ago. We did a lot of vol living this week, though. Of course, on Monday, we saw vol popping, markets selling off. Seemed like the AI bubble had burst. DeepSeek kicking all of that to the curb out there, listeners. Sending vol popping. But again, going back to the narrative we were just talking about, once again, you had mere moments to really catch that vol spike before it just drained through your hands like sands through the hourglass there. It's just, again, you had a short-lived vol spike, and hopefully you took advantage of it if you had some vol upside, because once again, if you didn't, you failed to monetize that vol upside. Hanging out at about a 15, like we said right now. VIX at a 98, down 1. And because we got our buddy Scott joining us today, we got Volley, a.k.a. the Nations Voldex, excuse me. That's at about a 12 and a quarter, up about a little over half a point, about 0.6 of a point from where it was this time a week ago. All right, let's go around the horn. Let's go out to Mr. Dr. VIX first. It's been a wild week. You and I chatted on the Pro Q&A earlier this week. Check that out, a deep dive into vol. I'm guessing if you're listening to this show, you like a good deep dive into vol. We went deep with Mr. Rhoads on the Pro Q&A earlier this week. Check it out over there on the Pro if you have not done so already. But Mr. Rhoads, a wild week. We kicked it off pretty spicy. Vol's been mostly coming in ever since, with the exception of a few moments here or there. What's been catching your eye out there this week, sir?
It's kind of a repeat of what, if you look at the chart, what Scott was just saying, and what we're seeing an awful lot of, which is people are trying to figure out how to pull some capital out of the market. And one way to go about doing it is get short volatility. So you see VIX get knocked down pretty quickly whenever we get those blips to the upside. And I'd have to pull out the spreadsheets, et cetera, and try to figure out when we went through this before. But there was a long time period pre-COVID where we went 2 or 3 years, and the easy money was made by short and volatility. And I'm going to pull a name out of my hat. I remember old Bill Luby being interviewed about it at an RMC. And I think maybe I was the one that interviewed him. And he said, we're going to see that second move up. And it's going to catch a lot of people that think they can just fade a little VIX spike and put the money in their pocket and move on in life. It's going to catch up with them, and we'll end up with, maybe a couple of days in the 30s, maybe a spike up to the 40s or so, and a much slower move lower.
A much slower move lower, says Mr. Once and Future Dr. VIX. Scott, we turn to you now. A lot going on out there this week. Vol spiking. Once again, like we said earlier this week, kind of coming off throughout the rest of the week. If that wasn't enough for you, you also had a little bit of Fed sprinkled in there this week, as well as a whole litany of earnings going on this week. What was catching your eye from a vol perspective this week, sir?
I think you have to pay attention to the deep seek. We'll call it a vol spike, a tech sell-off, tech break. I think that's what you have to pay attention to. The Fed was as expected. Nothing came of that. I do think the Fed's going to have to really think hard before they cut rates more than maybe once this year. And I've been saying that for quite some time. The economy is just not in a situation that demands 2 or 3 rate cuts this year. At least it's not right now. So I think you have to pay attention to the names that have really been leading the market for the past 18 months. Of course, NVIDIA is the poster child for that. Started the week as the biggest name in the S&P. It's now the second biggest name, was as low as third right after that big sell-off. Interesting thing is NVIDIA is still just over 18% below its 52-week high. Tesla's 14% below its 52-week high, although they're both up today. Tesla's up quite a bit today. So I think you have to be worried about volatility among the market leaders for a couple of reasons. One is if investors get nervous, they want to sell the names that have gains, and they want to sell the names that they think are most liquid. And those are going to be names like NVIDIA.
Yeah, they certainly have been coming for a little bit of NVIDIA this week. A lot to unpack. I realize, Scott, you haven't joined us in a year. We have a lot of new listeners since the last time you joined us on the show. So maybe really quickly, give folks an update. We were talking about Volley early. Some of them might not be familiar with it. But what the heck is Volley? What makes it different from VIX?
Sure. Ticker Nations Voldex. Ticker symbol is VOLI, available on from any data provider. Is our version of an implied volatility index, and it really measures implied volatility, not the variance swap methodology that VIX uses. But I was a pit trader for decades, and whenever anybody walked back into an option pit on the floor, first thing they would ask is essentially what's at the money implied volatility. And that's where everything starts. And so Volley measures precisely at the money implied volatility, constant 30-day in SPY. The S&P ETF, it's the underlying with the most liquid options with the highest volume. So Voldex, Volley is the Voldex version for SPY, measures closed form precisely at the money implied volatility. And if you look at that, then you can start to understand where volatility is really moving. As we say, you have to deconstruct skew. So you can also look at our other measures, SkewDex, ticker SDEX, and TailDex, ticker TDEX. And you can start to understand where volatility is really moving. Because let's face it, if it's coming from deep out of the money puts, that means something very different than if it's coming from at the money or if it's coming from out of the money calls. Each of those says something very different. But the problem with VIX is you don't know where along the skew volatility is really moving.
So stripping away the layers of abstraction, getting right to the heart of the at the money vol at the end of the day for all that fun, listeners. So check that out, Volley and the rest, if you are so inclined. As we keep on rolling, speaking of what's going on out there in the world of vol, another good way to do that is looking at the volatility surface, aka how the futures are lining up. And right now, listeners, that front portion of the curve is looking a little bit firmer, slightly, ever so slightly firmer than it was this time a week ago. I'm sure if I racked them right this second, it might be pretty much even or flat right now. But coming into the start of the show, we have that front Feb future right around 1660, puts it up slightly, about 0.2 of a point from where it was this time last week. The March future a little bit north of 17, about 1740, at literally almost unched, about 0.05 from where it was this time a week ago. If you start scrolling down the term structure, going up that slope, listeners, of your nice contango, which we have once again out there on the vol surface, we top out towards the end of the year. Now, this is the time a year ago where everybody, as you recall, everybody was freaking out about October, right? It's got that blip. It's got that election bump in it. Is it too much? Is it too little? It was endless debate, endless fodder for the vol market throughout the course of last year. This year, no obvious catalyst in October. There's no real obvious catalysts on the board, which kind of makes this stuff going on with DeepSeek and everything else so interesting. But we top out right now, going all the way out to October, a little bit north of 19, about 19 and an eighth for everybody who remembers their fractions out there. Haven't seen that out there in a while. Mr. Rhoads, we'll start with you, sir. What, if anything, is catching your eye out there on the vol surface this week?
You know, it's kind of just giving us a lot of flatness when you get out through May through September. Which often indicates a bit of uncertainty to me. There's no little bumps around Fed meetings, which, you know, if there was a whole lot of uncertainty around Fed meetings, I think we would see something like that. Odds are we don't have a big election to worry about, so you're not going to see anything unusual as well. It's textbook contango. Now, the February contract, which I think is this a 3 or 4 week cycle? Come on, move faster. So it's at a $1.40 discount to spot right now. I do think VIX probably is going to work its way up from 15. So I wouldn't put a trade on assuming that VIX is going to be at 15 at February expiration, which is on February 19th. So we got about 2.5 weeks until that. That's probably the biggest thing that stands out there is just that spot discount versus, I can't remember the last time we saw a full point discount like that or over a point discount like that. It seems like the front month has really been hugging the index for some time.
That does seem to be the case. Scott, good news. Our live chat, they're getting excited about Volley. You got Age and some others saying, just added Volley to 2 of my trading platforms that I use most often. There you go. Already more devotees to Volley, Scott. You're making converts.
Love to hear that. Ed TailDex, TDEX as well. I think those are both really important, and I think they can provide insight. And one of these days, we're going to get Russell to include them both in his weekly volatility roundup.
I could do that.
Just twist
I think
his
they're
arm.
both important.
I'm more than happy to do that. I need to expand what I'm doing in that report anyway. So I'm starting to bore myself.
Well, I know
that's a problem.
Since you and I haven't had a chance to talk, I will tell you that we get contacted by a lot of people who use VIX minus volley divided by either of those two as a measure of skew. And we would never calculate that because we don't own the rights to VIX, and SIBO would probably have a little fit if we did. But somebody like you, an academic, I mean, I think there's also tremendous insight there. So, and users, listeners can do that same sort of thing as a measure of skew.
There you go, listeners. Check it out for yourselves. You can crunch your own numbers over there. You don't have to wait for Dr. VIX to get off his. Oh, by the way, speaking of which, we got so sidetracked on all that fun. Scott, anything catching your eye in the vol surface this week, sir?
We look at kind of our own Voldex term structure, calculated from everywhere from 7 days to 360 days for our own use. Very flat. There is a little bump at 15 days right now. That makes a little sense if you're worried about getting through the rest of earnings season, but very flat. Nothing really stands out. And you would expect it to be relatively flat when absolute volatility is relatively low. So I think it's absolutely as expected.
All right, listeners, let's see if the world of VIX options is as expected. Coming into the start of the show, things are looking a little bit, at least from an ADV perspective, a little bit frothier out there. We got about another 50,000 contracts a day, 870 on the tape right now. So that's looking a little bit more respectable, starting to threaten 900K. Things are getting a little frothy in VIX land. We start threatening 900K a day. Today, getting close to halfway there, closing in on 400,000 contracts right now, about 387 on the tape. So respectable, not lighting the world on fire. Not north of 1 million contracts already like we were some days earlier this week. Let's see what's going on in VIX top 10 land right now. Our proprietary VIX top 10 indicator, TM. Listeners, cost you 202,000 contracts to break into the top 10. Now, it gets you to the April 20s. Again, 202,000 contracts. By the way, we're still 8-2 calls over puts. Let's see if we can find those two puts for ourselves, listeners. Number 9, 208,000 of the Feb 60s. That Feb 30-60 has been kind of active this week. We'll get to all that fun. You'll see when we get to the upper portion of the top 10. Number 8, 211,000 contracts on the tape for the Feb 19s. One of the, dare I say it, more reasonable strikes on this list. Number 7, 218,000 of the Feb 23s. Number 6, 228,000 of the Feb 15 puts. Everybody loves that 15 put strike. And there's still about 230,000 of them open out there. Number 5, right above it, we've got the Feb 17 puts. Dare I say it, another reasonable strike out there, north of 250,000 of those. Number 4, 292,000 of the March 20s. Number 3, 335,000 of the March 60s. Number 2, 349,000 of the March 30s. Again, March 30, 60, remember those. And then the big dog this week, still the Feb 30s, 365,000 of those bad boys on the tape. But you know what time it is now, listeners? It is time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Russell's Weekly Rundown.
All right, Mr. Rhoads, have at it, sir. The floor is yours.
Something, man. So the way I know you use a different service than I do to look at block trades, and the way they display them on Bloomberg is you can only look at 21 on each page. So normally, when I look at the block trades, and I am going somewhere with this, normally when I look at the block trades, basically with the weeklies, it's not even a full page of 21 of them. There were 80 block trades and weeklies on Monday this past week. I don't think I've ever seen that many. So I don't know if I get any credit for people actually paying attention to these things. It seems like a lot of people are very focused on the full month of February, because a lot of stuff in the February 26th options. But I will, with all of that, I'll get going on it. Monday with VIX at 18. And this, I assume, unless you guys are reliving your youth, that you were asleep at 2 o'clock in the morning, Sunday night or Monday morning. But just as VIX opened, somebody actually sold 125 of the February 5th 20 calls and bought the same number of the 27 calls. These are ones that expire next week. And they took in a credit of 58 cents. So just hoping that VIX remains under 20. It did look a little precarious this week, but they've been sticking this one out. A little bit later during the normal trading session, somebody came in when VIX was at 1790. I really like this trade. They bought 1,400 of the February 26th 19 puts. They paid between $325 and $330 for them. So basically, they're looking for 1575 or below if they hold it through settlement, or just looking for VIX to work its way lower. And they were taking advantage. They probably were kicking themselves a bit because we did get into the 20s this week with VIX. But I think if the underlying's almost 3 points lower now, I think they're pretty happy with their execution trader deserves a pat on the back. Tuesday with VIX at 1698, we had somebody buy 600 of the February 12th 25 calls. My assumption is that is a combo trade, hoping for volatility with the FOMC, or hoping with volatility out of next week's non-farm payroll number, which I believe should come out on Friday. It always comes out the first Friday of the month. I didn't check the calendar, so I am making an assumption there. But it seems to me that's kind of that's the first expiration after non-farm payrolls. So you got two big potential volatility events in front of you. Buy some out of the money calls. Wednesday, this is kind of, I love when I'm able to do this. Wednesday with VIX at 1688, somebody sold 1,600 of the February 26th 19 puts. They paid $332 for them. They sold them at $332. It appears that they paid $3.25 for these options on Monday. So they changed their mind and got out at scratch. And then also on Wednesday with VIX at 1684, another February 26th trade. And this is the first, I haven't talked about this strike price. I don't think I've talked about this strike price in this decade. But somebody sold 100 of the February 26th 1250 calls for $459 and bought 100 of the 14.5 calls at $284. They took in a credit of $1.75, and they've got a break even of 1425 on this guy. So anything below 1425, and they're looking pretty good on it. So somebody making a nice bet on returning to a low volatility regime. Thursday, yesterday, VIX at 1546. February 26th again. I tend to not like when people sell naked VIX options. I would have done another leg to this, but this trade makes a lot of sense. With VIX at 1546, somebody sold the 1620 strangle. Forgotten what the size was on that, but it had to be at least 100 contracts. They sold the 16. I think they sold the 16 puts for 96 cents and sold the 20 calls for $1, or vice versa. They took in $1.96 on that strangle. The break even to the downside is 1404. The break even to the upside is 2196, which is a pretty attractive range there. Personally, I would have taken a dime or a quarter and maybe bought some out of the money calls just to guard against the volatility spike. Just because I'm a chicken, I guess. And then today, with VIX at 1520, somebody bought 200 of and this is a really unusual trade, bought 200 of the February 26, 16 calls. They sold 100 of the February 26th 17 calls. They paid $1.80 each for the 16s. They got $1.50 when they sold the 17s. They paid $2.10. Now, the upside break, it cost $2.10. Under 16, they lose $2.10. The upside break even 17 calls starting to be in the money. It may be 17.15. But regardless, if I just took a look, I'm like, why would you do this? Why wouldn't you just buy the 16 strike calls? Well, if you bought the 16 strike calls, the cost is 30 cents cheaper. It's $1.80. Your break even on the downside, or I'm sorry, if you're 16 or lower, you lose all the premium, just like with that funky, I'm going to use your word, funky spread. But if you had bought the 16 call, your break even is 17.80 instead of 17.20. So they're paying 30 cents more, but they're lowering the break even by about 60 cents or so. So it's kind of a, usually ratio spreads are more about maybe a range, et cetera. But this was a ratio spread that lowers the break even. It does increase the cost a bit, but lowers the break even. And then also, I know if I've got a bullish spread on with VIX and VIX goes up, I often like to get out of the leg that's benefiting and maybe flip it around into a bearish type spread to benefit from the reversion to the mean that we would see. So maybe they're thinking about that on this trade, but it's a use that I have not seen before. And I love it when I'm digging through these trades and something kind of surprises me. And as old as I am, you'd think I'd seen everything.
I do love a good surprise. Getting a little bit of that today. We got our chat popping off asking about that beeping. Yeah, you may hear that beeping in the background. Listen, I just had to go investigate myself while Dr. VIX was talking. Apparently, there's a fire alarm going off in the building. So I'm safe for right now, apparently. I don't have to evacuate. But if a burly fireman bursts down the door and carries me away, listeners, you will know why. But you know what? I will stay here until the very end, until the smoke asphyxiates me, just to keep the vol views going for you folks. That's my level of dedication to you folks out there. All right, let's keep on rolling. Old school turn of the last century stone building here in Chicago. I think we're safe from fire, so I'm not sure what's causing that beeping, but it's fun nonetheless. Not at all distracting as you're trying to host a volatility program. Let's get into the business out here this week, listeners. Friday, today, looking a little bit firmer. We said it was about 381 when we last checked in on it. As of right now, a little bit north of 400,000, 417,000 contracts on the tape right now today. The big dog was like about 53,000 of the March 14 puts. And then behind it, we have just a slew of May puts, 45,000 of the May 18 puts, 18,000 of the May 19 calls, 18,000 as well of the May 19 puts, and 17,500 of the March 24s. Checking out some of the platforms here, they're saying there was a May 18, 19, 17,000 by 7,000 ratio risk reversal going up out there today, as well as a 1724 4,900 by 18,000 risk. Well, apparently it's a risk reversal day in May out there in VIX today. Either that, I should say, all of that adding up to about 420,000 contracts on the tape in VIX today, listeners. Yesterday, spoiler alert, a little bit more active, nearly 1.5 million contracts, 1.47 million contracts on the tape out there yesterday. Most of that, I won't say most, but a good chunk of that, roughly 500,000 contracts going in what looked like a sizable roll of the Feb 30-60 to the March 30-60. The most actives yesterday, 179,000 of the Feb 30s, 170,000 of the March 30s, 158,000 of the March 60s, and 131,000 of the Feb 60. So again, it looks like a lot of rolling action. Definitely opening on the March legs, slightly opening on the Feb legs, which is what makes it confusing. Again, if you heard our top 10, the number one with a bullet is still the Feb 30s. So it's not like they took a boatload of them off. So it was kind of a weird one. My first blush, though, is that they probably were rolling a chunk of that, and then some other folks maybe came in to replace that paper. I'm not sure why the OI would go up about 50,000, but it did. So kind of a weird one out there. Feb 30-60 versus March 30-60, and the whole day lighting up to the tune of 1.5 million. By the way, number 5 yesterday, the Feb 15 put 67,000 of those bad boys. Wednesday, a definitely respectable 898,000. Once again, we have a couple of bits of activity really dominating most of the paper flow out there. We have the Feb 30s going up again 141,000 times, followed by number 2, the March 30s, number 3, the Feb 60s, and number 4, the March 60s. So this has been kind of a popular trade for a little bit now 898,000. On the tape, number 5 on Wednesday was the May 16 puts, 22,000 of those. Tuesday, pretty light. Obviously, Fed day, or the day ahead of Fed day, really, some folks kind of keeping their powder dry. 437,000 contracts on the tape. The big dog, 29,000 of the March 25s, followed by 29,000 as well of the Feb 25s. Number 3, 21,000 of the Feb 30s. Number 4, 21,000 of the March 18 puts. And rounding out the top 5 on a pretty light Tuesday, 18,000 of the March 18s. Been a while since we've been open on Monday again, and Monday, a banger out of the gate this week, no small part due to that DeepSeek AI-related sell-off out there. Over 1.04 million contracts on the tape on Monday, as it seemed like the entire AI bubble was just collapsing around our ears on Monday. The big dog on Monday, 51,000 of the Feb 20s, followed by number 2, 51,000 of the March 20s. Again, if you had those in your back pocket on Monday, hopefully you hit the bid aggressively, because once again, past his prologue, you had a very short window to monetize any VIX upside on Monday. 48,000 for number 3 of the March 15 puts. Number 4, about 40,000 of the Feb 15 puts. And number 5, 37, almost 38,000 of the May 20s. Scott, I know you don't pay a ton of attention to VIX flow, but it has been kind of a wild week. Anything catching your eye out there in the wild world of VIX options this week, sir?
I think you're absolutely right that one of the problems with trading VIX options sometimes is, and you just mentioned it, and we discussed it very early, is you have to be paying attention, or you have to have your limit orders in order to exit some of these positions, because they move so quickly. The other thing I'm watching the equity market fall apart here. Kind of interesting now. The Dow's down 0.5%. The NASDAQ 100's given up a bunch of its gains. The S&P is now more than 40 points from its high on the day. So I don't know what the news is, but equities are selling off here.
You know what happens, Scott? We started streaming. That's what happens. Whenever we start streaming,
there you go.
We drive the market one way or the other.
And a lot of these volatility measures are now in the green on the day. They were decidedly red early. Volley is now up 0.25%. VIX is unchanged, but Taildex is up 3% on the day now. So, people are selling equities and buying options now.
Yeah, listeners, we have the Dow turning red, off about 0.5% now. S&P flirting with unch, still up about 0.1% or so. NASDAQ up about 2/3, and VIX cash ticking up a little bit firmer as well, about 15 1/3 out there right now. And our old pal Volley was at about 12 1/4 to start the show, now at about a 12.80. So things looking a little bit firmer. Again, I said it at the top of the show. If you don't like what this market is doing and where it is, just wait 5 minutes. And we are very much in that mode right now as we keep on rolling to the universe of VIX ETPs, Mr. Dr. VIX's beloved inverse vol. We will start there. Again, inverse vol starting to give up some of that ghost as well as vol is firming up. That's obviously how that works, listeners. SVIX was a little bit higher, closer to a 27 when we kicked off the show. Now about 26 1/3, down almost a full point, about 0.9 of a point from where it was this time last week. You know what? Doesn't seem to matter what's going up out there, though, in terms of underlying movement, because it doesn't seem to be able to gin up a whole heck of a lot of paper out there. I mean, that ADV continues to move in the wrong direction. It's back down to 7,100, down almost another 2,000 contracts a day. Today, about 3,500 contracts on the tape, so I don't know what it's going to take outside of tighter markets. That would certainly help, but I don't know what it's going to take to really start driving some more options flow out here. If you're wondering what the big dog is out there in SVIX options right now, we got about 3,500 of the March 15 puts. Interesting, a very interesting strike out there, 15 puts, followed by number 2. This sounds more familiar, 1,300 of the March 35s. Remember, it wasn't that long ago and we saw someone piling into the 30s and the 35s, and we thought, wow, that's a pretty wild strike in SVIX, and then lo and behold, we blew through it, kept going. Yes, fun times. Doesn't seem like it was that long ago in the world of SVIX. But Mr. Rhoads, I know you're watching and trading a lot of inverse vol. What's catching your eye as vol appears to be firming up and SVIX stepping down, sir?
Just one thing real quick, like breaking news. The White House just announced that the Canada, Mexico, and China tariffs start tomorrow.
Oh, so
that's what I really do think that's what hit the market.
It wasn't just vol views crushing the market like we always do.
No, it wasn't. It wasn't just me getting out all my shorts. No, it wasn't that either. So just, within the ETP space, they've been kind of doing what they're doing. I'm down to a quarter position in SVIX because I'm probably trading with my heart more than my head these days. I don't have any short calls against it right now. Probably try to add to it below 25 if I get a chance sometime in the near future. Probably will get a chance in the near future at some point. That ETP space, they continue to do what they're supposed to do. I do think that it's going to be you're going to have a tougher time with the long volatility products now that we're in much more of a normal contango environment, and they're going to have to deal with that in addition to volatility at relatively low levels right now. So even if you get a VIX spike over the weekend, if the curve was where it was when the program began, I'm assuming it changed, you'd still need a lot of movement out of the front 2-month futures because they're at such a premium relative to the index. And I probably ought to cross-reference that with buying UVIX over weekends.
Yeah, we will get there.
That's when I say things like that, I write myself a note.
We will get there in a second. Scott, I said it's been a year since we've checked in with you. A lot going on, including a lot going on in the world of inverse vol. Is this? I know you have a lot of vol products, a lot of vol indices. You keep a thumb on the vol product space. You keep an eye on the inverse vol space, sir?
Well, sure. I think if you're a vol trader, you have to. If for no other reason than to get an idea of where the flows are likely to come from and in which direction. The inverse vol products, I consider those to be tactical products. They're not strategic products. That's not something you want to have on all the time. As we used to say in the pit, always being short volatility, particularly out of the money options, is a great way to get rich slowly and go broke quickly. But from time to time, if you use them tactically, I think they make a lot of sense. If you're going to use options on them, then I definitely want to define my risk and use some sort of spread.
Speaking of getting rich, this one could get rich explosively, I suppose. I don't know if you get rich. You'd make a little money if things go crazy. Our chat's all obsessed with this 401 lot of the SEP 200s that went up today in VIX. Yeah, it's a little bit below our threshold of volume to talk about, but strike-wise, it's certainly eye-opening. They traded 400 for a dime and a one lot for 11 cents. They actually moved the market. They were 9 cents at a dime, and then they moved it to 8 at 11. They had to pay 11 for a one lot. Some poor sucker got stuck paying 11 cents for his one lot. That has Matt Amberson written all over it, by the way. He loves his junk, his garbage VIX calls. Of course, I'm probably disparaging him. He doesn't go that high. I think he likes, 60, 80, somewhere in that range. But 200, I think that qualifies as junk by any definition. Of course, again, we've said it before, you don't need to get to 200 to make these things get a 2-3x pop. So as long as that's what you're looking for, then okay, it's a fun little flyer. The 11 cent kind, I don't know. Scott, I know you love these prints. I see you tweeting about them all the time. People are putting up Feb 100s and all that kind of stuff. You can tell us, it's just friends talking here, Scott. Was this 401 lot? Was this you of the SEP 200, Scott?
No. This sort of thing is fun to watch. It's kind of fun to see, but it is tough to imagine an environment in which that's going to work. And I mean, how do you expect to even get paid if VIX is at 200? I mean, what in the world is going to happen to broader financial markets if VIX is at 200 by September?
It's like what all the old timers used to say when I first walked in the SPX pit. They would sell, nonsense puts, 400 puts and all this crap. And they would say, who cares, kid? Because if we get down there, no one's going to be here to collect. So they would just hit the bids on all that stuff. You could make the same argument in the other way, in the other direction for this crazy, wild VIX 200 listeners. I don't think we ever want to entertain what would be going on out there to make those levels. Let's get out to the realm of levered vol, Russell's favorite secret weekend trading product, aka UVIX. Getting a little frothier right now as well. 2830 giving up, or I should say gaining about a point, 1.1 points actually, as we're coming into the latter portion of the show, listeners. Today, putting up a little bit of paper, 9,000, but you can see the ADV, once again, like SVIX, continuing to move in the wrong direction, down another 13,000 contracts a day, only 35,000 contracts going up. Again, tighter markets would help this, but it's kind of hard to have tight markets when the volume's falling off a cliff. So one of those chicken and the eggs things, what comes first, the tight markets or the volume? Chances are you need one to get the other. But a lot going on out there. Mr. Rhoads, I know you've been playing around with adjusting your secret weekend trade in light of the big SVIX reverse split. You talked last week about using some of the VIX futures and how it wasn't really ideal. I'll give our listeners an update. What are you up to now?
So I on the Pro Q&A, I kind of segmented out at a very high level how I run my trading account, and basically 10% of it is invested, I shouldn't say invested because it holds it from Friday close to Saturday or Monday open, but I take 10% of the portfolio and I put it into UVIX on the close on Fridays, and then I exit around the open on Monday, and it's done particularly well. Got a couple of nice pops over the last few months, since June when I kind of came up with the numbers. I continue to try to find other ways to trade it, maybe ways to screen out, missing some of the 60% of the time that it goes down over the weekend. So I can't come up with anything better than just the very basic buy on Friday, sell Monday in the morning. I did run the numbers with VIX futures using the close on Friday and the VIX future price at 8:30 a.m. Chicago time, or on the U.S., on the regular U.S. stock market open time, and it actually is a money loser with the front month future, which makes me think maybe you could buy UVIX and short the front month future together and do quite well. I just got to see how much that smooths out the performance. So I'm still trying to come up with something better. Just hadn't found it quite yet.
It is a difficult nut to crack, but I should give you your feathers, sir. We give you a hard time all the time. I will give you your feathers. If you did have the weekend UVIX trade on this week, pretty good weekend. You got about close to 5 points, I think, over the weekend, thanks to all things DeepSeek. So I should tip my cap to you when it's appropriate, sir. Well done.
Well, thank you very much.
All right, let's keep on rolling. I don't just give him a hard time all the time. So I give him his flowers every now and then. Very few and far between, but it does happen here on the show. Let's run through some of the rest of the Vol ETP universe. Then we'll get to all of our crystal ball fun out here for this week, listeners. I can hear a lot of you already, a lot of you UVXY Defense Force saying, well, if you don't like the liquidity of UVIX, what about UVXY? And you know what? That argument is holding up well today. UVXY 18.5, up about 3/4 of a point right now, but putting up 85,000 contracts already today. That's pretty close to its ADV of 103,000, which is down, but down slightly, about 5,000. So I've said it before, I will say it again. The only real argument to trade UVXY over UVIX is liquidity. Now, that's a pretty compelling argument. Spreads at the end of the day are a big part of the profitability of your trade. So don't get me wrong, but that argument is holding up right now. So there you go. I give your flowers to all you UVXY fans out there. You can stop writing in. Why don't you talk about UVXY more? There we go. I did it for you right there. Top positions in UVXY, it's all been reverse split to hell. About 15,000 of the June 34s. And I can't tell which of the reverse splits this is. UVXY2 out there, listeners. And then we've got Russell's favorite. He said on our Pro Q&A this week, I believe this is his favorite trading product of all time. Forget VIX, forget everything else. He's all in on VXX. Can't stop watching it. Can't stop trading it. 42.90, up about 1.2 points from where it was this time last week. Today, putting up about 26,000 contracts, which is looking decent when you see the ADV is down to 34,000 contracts a day. That is down about 4,000. If you're wondering what the big dog is out there, it is 7,000 of the March 60. So 60 strike in March, popular in VIX and in VXX, which is kind of wild. And Mr. Rhoads, before we roll to the crystal ball, I will give you a chance to defend yourself. I know you're not a huge VXX fan, sir. You can clarify.
What I'm using the long volatility ETPs for, the most appropriate one is the one that you get the most leverage from. What I do over the weekends, it does work with VXX. It's just, I know this is going to sound kind of shocking, but it gives you about half the performance that you get from UVIX, which sort of makes sense since UVIX is 2 times the VXX. If I used to have an approach where I'd sell call spreads when we'd get vol spikes, and I would use VXX because of liquidity. I should revisit that. I haven't looked at that strategy in a while, but I ought to revisit that and see if maybe that's something I should be doing. So if I'm looking at things that are option oriented, we do have to start to get away from some of the less liquid markets. Even, it's not like I'm slinging size or anything, but still the spreads are not that palatable for retail volume as well.
It is palatable, though, always, listeners. It's your questions, so let's get really quickly to a little bit of the old volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, listeners, we have a couple of questions that are dividing our audience. I want to get the thoughts of our panelists here, our guests, see if maybe they could clarify their thoughts on it. We had, obviously, the DeepSeek kerfuffle that kicked off all this madness on Monday. So we have a 2-part question for you this week, listeners. The first one is, this DeepSeek, is it the canary in the coal mine for the end of the AI boom? Quite simply, will the S&P 500 close positive on the year, you think, as a result of all this madness? Yes, no, or who cares, I'm slinging vol, or who cares, I'm too busy trading crypto? And as a related question, we also ask you, do you think NVIDIA will close positive on the year? So a 2-parter, take them however you want. Scott, we'll start with you. Do you think, A, is this DeepSeek thing, does it have some legs to it? And B, how will it impact the S&P 500 and NVIDIA this year?
DeepSeek is not really the story. It's not the important part of the DeepSeek story. The important part is clearly that you don't have to have a billion expensive NVIDIA chips, and you don't have to spend literally billions of dollars to program your AI to have it be really functional. That's the story. And I think it means that this is just the beginning of AI. We just, last week, there was supposed to be a $500 billion investment in AI and data centers. So this is going to make it really tough for certain names, but it's going to be great for everybody else.
So which way do you think our audience is going, sir? You think they're picking NVIDIA up or down on the year and S&P up or down on the year, sir? Or maybe they're too busy slinging vol to care?
I think the S&P, listen, I'm an index guy. I think the S&P, if you ask me January 1st, any particular year, what's the S&P going to do that year? I'm going to say it's going to be up 7%. That's what it does historically. It's already up 3.33% this year. I think the S&P will probably go higher. Tough to see that NVIDIA is going to be able to sustain its gains, though.
All right, Mr. Rhoads, we chatted about this on our Pro Q&A. You now get your chance to weigh in one final time, sir. What do you think the impact of this whole DeepSeek kerfuffle is on the S&P and on NVIDIA this year, sir?
Show me that this DeepSeek actually works before I believe it. How's that? I want proof in the pudding, because I used the Elizabeth. Did I use the Elizabeth Holmes Thanos thing with you?
I don't believe so.
Okay, I was saying that basically what they're trying to do, and I've talked to some people at the university that are better in AI than I am, and there's a feeling that, back in the day, Elizabeth Holmes said they could take a drop of blood, put it in a box, and they could tell you all this cool stuff. I think DeepSeek is an AI version of that BS. I don't think they can do what they say it can do.
Wouldn't be the first time something out of China has spread some false claims. Let's just say, which way do you think our audience is going? Are they fading the S&P and NVIDIA for the year? Are they buying it?
I think they're probably assuming that NVIDIA and the S&P will be higher on the year, and I could see that. I just think that the path is going to be pretty freaking rocky.
Well, right now, listeners, and you got a little bit of time left, so if you're listening on the podcast, you could still vote by the time the podcast comes out later today. We like to structure it for you folks on demand as well. Right now, you folks are fading the S&P. 46% say it's going to close negative on the year. 32% say it's going to close positive. 18% of you, the hardcore Vol Views audience, say you don't care. You're too busy slinging Vol anyway. 4% say you're too busy slinging crypto. Weirdly enough, you go the other way for NVIDIA. 70% say NVIDIA is going to close positive on the year, and 30% say it's going to close negative. Interesting scenario of have the S&P down and NVIDIA up this year. I don't really foresee that, but hey, who am I to second guess our audience? And then we had a fun flash poll yesterday during Option Block with our buddy the Flowmaster. He highlighted some Pinduoduo Feb 140s, substantially out of the money calls, trading 30,000 times for 60 cents. We asked you, that price, are you a buyer or a seller? And weirdly enough, almost 60% of you, 58% say you wanted to buy them. 42% say you're sellers. So that kind of surprised me. Let's see if Vol has any surprises for us, listeners, as we head on into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, welcome to the crystal ball, the portion of the show where we attempt to wrestle with what the vol gods hold in store. And as we mentioned, it seemed like the worm is turning, and that continues to be the case. S&P flirting with unch now, Dow up about 0.5%, NASDAQ up about 0.45%, and our old pal VIX Cash starting to tick north, almost to 1590, 1589. I say almost a 1590 because our buddy Brian was at a 1601. It was myself, it was Brian Overby last week, it was our buddy Mr. Dr. VIX and the meatball from Option Pit on the show last week, and Brian was close, 1601, 1589 right now. We'll give him the benefit of the doubt. If it goes up 0.02 in the next couple of minutes, I will give him a crystal ball victory. I was the next closest at 1555. No joy for me, even though I was looking pretty good to start the show. Again, shows you how fickle the vol gods are out there, listeners. And then the meatball was at a 1331. Russell was at a 1447. Scott, our guest, was in the pole position last week. That means you get the dubious honor of going first this week. You can predict VIX if you want to throw some volley into the mix as well. We can do both of those, sir. What are you predicting for this time next week, sir, in the vol market?
My prediction is going to be a little bit different. I want to let everybody know that our subscription service at nationsindexes.com is going to be live on Monday. People have been talking to us for a long time. Please offer all of your volatility indexes via subscription service. And Mark, I'm happy to say that goes live on Monday. Nationsindexes.com. You'll have access to all of our volatility products on all the important underlyings. And if you want more up-to-date information, you can follow our Twitter account. That is, well, I call it Twitter still. That's nations_indexes, and we'll have all of the details about our subscription service as it goes live on Monday.
All right, listeners, stay tuned for that. A lot of fun stuff. If you want to go deep, I know some of our listeners did, into volley and all that fun stuff, stay tuned for that. Mr. Rhoads, sir, what are you feeling for vol this time next week?
I know what you do, Mark Longo. I know what you do.
What did I do?
Back when we used to take car trips in the Rhoads household, we'd guess what time we were going to arrive at home. And my dad would always win because he would slow up or speed up a bit to make sure he won. And I feel like you kind of hem and haw sometimes if the market's moving in your direction, and sometimes you go really quick if you're very close. So I know what you're doing. I know exactly.
I'm not that close right now. It is moving away from Brian, though, unfortunately. It's ticking away from him.
So,
I was trying to buy him a minute.
It's like, you know, your dad used to cheat like that on that guy. I bet you Mark does something like that. So, employment number. So I'm gonna go for 1847. That's where I think we're gonna be. I think we're gonna be higher.
Spicy, interesting. I don't hate it. Yep. You know, I was trying to buy Brian some time. I guess if I go back and re-rack exactly at where the show is supposed to close, he might have been within his frame of reference. So maybe we'll give it to him. I will see. Generous fellow that I am, listeners. And this time for next week, listeners, I'm gonna say we are still looking a little bit juicy, a little bit elevated from where we are right now. Maybe not quite as juicy as Russell was saying. I'm going to say we're at a 1635. All right, listeners, that music means we've come to the end of another fun journey through the world of vol. I am pleased to say I'm still here. I did not burn down. I will go investigate what's going on with all that beeping and buzzing after the show. But we all survived, listeners, which is the important thing at the end of the day. And Scott, you kind of already hit the plug, but if you want to hit the folks again, remind them one more time, where can they go to check out all that fun stuff on Monday?
Nationsindexes.com will be live on Monday, and really looking forward to it. I think it's going to help traders craft better trade structures. You're going to be able to do it using data, not intuition, and real insight.
There you go. Check it out for yourselves. It's live on Monday. He's been talking about it for a while, listeners. We can finally get it in our hot little hands. I need to play around with it. I may have gotten early access, listeners. Spoilers. I'm going to play around with it maybe this weekend. Kick the tires and light the fires. It should be fun. And Mr. Rhoads, sir, if folks want to check out all of your cool Substacking and everything else, where should they go? What should they do?
Substacks. If you just type my name in to Google, I think my Substack and my Twitter/X account all come up. It's just the Substack's my full name .substack.com. My Twitter is my full name, Russell Rhoads, RHOADS. And on my Substack, there's a voluntary subscription part. And each month I do the same thing that we're doing right now. I'm stealing from you. Somebody gets a copy of one of my books if they're a paid subscriber and they are closest to where VIX closes on the month. So I'll open that up again this weekend for subscribers.
Ripping me off twice with the monthly giveaway and with the crystal ball thing. You know, my invoice will be in the mail, sir.
Yeah. So there you go.
Check them out. Maybe you can win some fabulous prizes over there on Russell's Substack as well. Speaking of winning fabulous prizes, the Queen, she has no mercy, carping me mercilessly. She comes in at 1630. Queen, I thought we were friends. What are you doing here? My building's burning down. I'm doing a show just for you, and you're carping me on the VIX prediction. Get your predictions in. We got a bunch of 16 handles in the chat, so folks are feeling a little bit frothier, which makes sense. The S&P did just tick negative, listeners, so it seems like the worm has officially turned. Officially, that is going to do it for the network this week on demand and on the pro side. Remember, if you're in the pro, you already got Options Oddities. It's waiting for you there on the pro podcast feed. Again, the pro podcast feed, the real reason to get in on the pro, it's got everything there. So once you sign up, you can go back. Now, what is it, 4+ years of the pro? You can get all that, hundreds of episodes waiting there for you. Great pro Q&As. Scott's been on it. Russell's been on it. All sorts of great folks from the world of vol. If you like vol, pro is your friend. And of course, Options Oddities has been a wild ride of late. Quantum straddles, madness, all sorts of Portillo's one of the best performing stocks of the year so far. Up 50-odd%. We've been all over that on Oddities. So it's been a wild time out there in Oddities. Oddities alone very much worth the cost of engagement out there. And of course, the giveaways are fun. All kinds of good stuff. Live streams, the Options Insider Doc. You get a chance to carp me live here. What's better than that? On the show, theoptionsinsider.com/pro. Get out there, have a great weekend. I will hopefully have a great weekend if the building isn't burning down, listeners. I'll be back again on Monday with the option block all the way through to next Friday. Another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.